All right, GM, everyone, and welcome to Numbers Therapy episode 55, Macro Roundtable. Today's episode titled Time to Load Up Our Crypto Bags. Time to load up your bags, time to pack your bags. It's a fine line sometimes. Let's get into dissecting that today. Here at Numbers Therapy, we're talking through the macro, operational, financial, technical, trading based other dimensions of Web3, while of course having some good communal laughs along the way. For everyone who's live, be sure to ask questions and we'll weave them in along the way. And lastly, most importantly, Numbers Therapy is rated NFA, as in none of what you hear in here is financial advice. So, without further ado, and on to today's guests and episode. We sit today in September of 2023, historically one of the weakest months for crypto and Web3, even in bull markets. Interest rates high, inflation high, ambiguity about the Fed's moves, impending recession, possibly China meltdown, a continued war, and oh yeah, an impending election in the biggest market in crypto and risk assets. And if that wasn't enough, we've seen ambiguous, half-baked evolution of Web3 through this bear, driven by a devolved incentive system without royalties. And so that leads us to today. Where are we at right now? Is the climate ready for NFT bull run part 2 yet? Today's guests regularly join me every 6 or so weeks to fully pull up and analyze and debate the climate. Today we're going to go pretty top down on the objective and subjective and try to land on where we think we're at, as well as get a vantage point on how everyone feels about where to place bets. And I have a feeling this may vary a little bit today. Please, everyone, welcome our core roundtable crew, Shaggy, Easus, Crocked, to the stage. Everyone, Shaggy, Easus, Crocked, how are we all doing today?
Good, good.
Good, happy to be here.
Amazing, amazing. Okay, so like I said, we're going to go a little bit more top down today. Let's just start with a simple question and not lead down the pathway, but hit right on it. Are you loading up your NFT and crypto bags yet? Crocked, let's start with you today. Yes, no, are you, or some other one word answer you want to give. Are you loading up your NFT crypto bags yet?
I am not loading up my NFT crypto bags yet. I don't think the environment is ready for it, or that it's a good environment where um, that time has come. Um, I spend my days um, trading short term and just looking at charts, what I do all day. Maybe at the end or something, I can pull up a chart. But I think we have lower to go as far as crypto goes. So no, I am not. I'm not loading up my bags just yet.
For some hope and variance here, Isis, over to you. One word, any word you want to choose. Are you loading up your NFT and crypto bags yet?
Yeah, for me, NFT bags definitely not. We can talk about that a little bit later. Crypto, for Bitcoin and ETH, a little bit more like I would say mid. So I'm starting to layer in a little bit more here after kind of taking profits at the top of that range. So, um, but yeah, I still have orders lower. So I would say no for NFTs and half and half for crypto.
Shaggy? Last thing on Shaggy?
Oh, I lost you there for a bit. I assume it's the same question. I'm kind of with Yeezus. I'm no way on NFTs, and I dollar cost average in just to the biggies, Bitcoin and ETH.
Okay, fair enough. So I guess the obvious follow up question to that, coming right back to you, Shaggy, is why? What are you seeing? We're going to dive in, in a little bit to some other components that I want to talk about too, and dissect it a little bit more. But if you just had to give kind of a quick reaction to things, why are you landing on a little bit in maybe some of the token side and a firm no on the NFT side at a high level?
Well, I mean, there's just no positive economic catalyst. I think most of the trends are rather negative. The consumer is holding on though, so we're holding the economy together for now. But more recently with the dollar going higher, rates going higher, those are pretty significant headwinds. Um, we'll see. We've probably got a government shutdown coming. We've got some big labor strikes coming. So we'll see how we make it through the fall. But to me, just too many headwinds and just not enough positive momentum in the markets. I mean, you look at the summer, crypto was down a bit. NFTs were down a massive amount. Equities were up, but really quite narrow, just driven by the AI narrative. So just some of the big boys keeping that equity market alive.
Easus, if you had to distill on your side, sounds like your thought process was similar. A little bit of crypto, a big hell no to NFTs, I think was the reaction you had, or something like that. If you can give, maybe a line or two as to why.
Yeah, I think for NFTs, I mean, not only the narrative for NFTs hasn't really changed much. I think now you're starting to see I think now you're starting to see where like some of the shakier foundations are, and so I kind of want to see what new narratives, what new players emerge out of like kind of this last kind of drawdown that we've seen over the last couple of weeks before I do anything there. Um, and see with the new wave of people coming in, try to do or what they're focused on when they come in. From a crypto perspective, um, you know, I agree with Shaggy. Like, the just the equities market. Like, if everybody is still indexing crypto, I don't know if people still are, but if everybody's still indexing crypto to tech, and the tech market was boosted by AI, then we would have gotten some, I don't, a portion of natural lift, or maybe a little bit of a floor from that activity, just from the overall kind of market strength. Um, and so I've been averaging in, as Shaggy said. However, I do think when it takes off, it's gonna go fast. If and when it takes off, it'll go fast, and I don't want to miss that. So I'm a little bit more mid, like I said, on crypto. But for NFTs, I want to see where the winds blow before I get bullish again.
I'll make you feel a little bit better where it's more about you guys today, certainly, but I'm definitely a little bit more in your mid camp also, to more make sure that it's DCAing. But over to Chris, who always lands at one end of the spectrum, in a good way. Where's your head at, Chris? Why are you pretty much no on both? Actually, I know you said you're trading, but it sounds like from a midterm perspective onwards, you're more of a no probably. So what's your one or two lines on that?
Yeah, well, first, let me clarify that it's always a spectrum, right? Risk spectrum. So NFTs are going to be furthest down the risk spectrum. So they're going to be the riskiest assets. And then I see like altcoins, and then Bitcoin and ETH would be like the safest crypto assets, quote unquote. Um, and so I can see a dollar cost averaging strategy going on in Bitcoin and ETH, but I think the riskier stuff has lower to go, um, possibly new lows, and I'm not ruling that out for Bitcoin and ETH either. But just, I mean, pretty much everything that Shaggy and Easus said. I just don't think the environment is set up for it yet. Um, there's still discouraging investment, and I guess going towards risk assets. Inflation still high, um, interest rates still high, and if people aren't investing in the safer assets, um, why would they go down that far onto the unsafe assets? So that's where my head's at.
So we're gonna dive a layer below and kind of dissect some of the factors. And what's very cool about numbers therapy in general, but especially this episode, is even the three of you come from varied backgrounds, right? So the expectation is not everyone's going to be an expert in each of these things. So it's more about just giving your perspective and your opinion, right, from your vantage point. So I was hoping we can kind of go down and like dissect some variables, some factors that kind of exist out there, and get a sense of whether you think it's a thing and how it plays in. Does it not play in? That kind of a thing. And I imagine most of them you think will play in. It's just a question of degree. So let's maybe start with the kind of like international geopolitical side of things, right? If you guys remember back, what was it? Maybe I have no sense of time anymore. A year and a half ago, when Ukraine and Russia started off, right? That put a bit of a shock in the market originally, right? We're now kind of a year and a half past that, or something in that direction. Still a thing, right? It's still out there. Is that still a factor out there? Is that playing into the markets? And if so, Does anybody have any thoughts as to how it's playing or how we should be considering it? Let's start with you, Shaggy, for instance. And do you think that's still factoring in? Is that instability factoring in? Is it factoring in another way?
No, I don't. These geopolitical events generally don't impact markets that much. I don't think it's related to what's going on in Ukraine, but I keep a close eye on oil. It's starting to creep up. There was the kind of the food inflation scare out of Ukraine. Seems to still be some issues over there with exporting the wheat and the food, but doesn't seem kind of the worst case doesn't seem to have happened. Don't know why it would now, but all those factors again, not so much with the war, but elsewhere, what you see geopolitically, pushing up oil prices. I'm afraid inflation we're going to start to see increase again by the time we get to year end, and that's going to be a problem.
Yeah, that makes total sense. Chris, do you agree with Shaggy's point? Do you tend to view those kinds of big shocks, like the war start, for instance, as more of like a more acute thing when it happens, a bit of a shock initially, and then it dissipates a little bit, other than these like other factors that factor in, like supply chain and things like that? Do you view it the same way?
Is that for me, Aslo, or is that still for Shaggy?
That was intended for Chris, but if you got a position, Easus, you just rip in, man. Go for it.
Oh, I'm sorry, I didn't hear Chris. Go ahead, Chris. I'll take a second to think about it.
Aslo, I don't. You're good. You just Aslo. I don't think you said my name, but yeah, I pretty much feel the exact same way. I don't want to beat a dead horse, but yeah, I think with anything psychologically, um, when something shocking hits, when something abnormal hits, obviously that causes anxiety, nervousness, and you can see those things in the market. And then as sad and maybe not right as it is, you become numb to it. There's still people dying. There's still bad things going on. There's still um, possible negative effects to the worldwide economy. Um, but because it's not the new, fresh news that makes you nervous or anxious, um, yeah, I do tend to think it gets a little bit more muted. Um, so yeah, go ahead, Jesus.
We'll go over to you in a second, but I just have one question first off of what you just said, Chris, which is
Hmm.
like, with what you're saying about this numb comment, right? At what point does everything just aggregate into the fact that there's always bullshit that's going on in some way or another, whatever flavor you want to call it, and that is the norm by itself. Therefore, it's not worth paying attention to, or are there specific things worth paying attention to? I mean, like, is it only limited to these kind of like you know, war slash geopolitical things, and there's always some kind of tension, and therefore, other than the immediate shock, we're just going to always expect that there's something like this that exists, and therefore, kind of ignore it. Is that the conclusion we're coming to?
Um, yeah, it's hard to really put into words. But yeah, I think it's just more like acute things that are unexpected. That's I guess you can't price everything in. But yeah, there's always some sort of level of uncertainty. I guess as things pop up, you increase the probability of negative effects, and so that has to be priced into the market. Um, and so I guess it's hard because the markets are really just group psychology, groupthink, and so what are people missing? What are people not thinking about that might come smack you in the face? Um, and so yeah, that's I guess it's hard to talk about it because you don't even know what it could be. But yeah, just something that people are not thinking about at all.
Edith, are you as cynical about this, about at least like the war and that kind of tension side of things, and almost therefore like baking into your brain that something will always kind of be in that direction. Sometimes there's going to be shocks that happen when like something acute happens, and else we're just considering it the norm at this point. Do you think about it like that? Do you think about it differently?
I think the output of how I think about it ends in the same place. I think the way like my input is a little bit different. So I do think that the market is kind of now distilled into, I mean, it probably always has been, but I think just like the globalness and the like the speed at which the market can react has just turned into an overall kind of sentiment indicator, financial kind of sentiment indicator that just kind of monitors everything that's going on. And then I agree that the these things that happen at the time they create these shocks, right? But I look at the shocks kind of like from a chart perspective, they just create displacement, and then it creates like trading opportunities various ways, and then they kind of normal back out to like I guess kind of like the normal rate of the market, right? But the way I think about the war, especially when I look at the length of it, I start thinking about things like, well, now if this is going to kind of become a prolonged war, who stands to benefit? And I haven't gone down these models yet, but these are like something on my to-do list. Like who starts to benefit, or like which nations or which areas would tend to benefit if it's longer or shorter, and what that may mean. And then is there something I can think about, or some kind of some kind of theory that I can think about financially that I can use to I mean just talking purely financially, not talking about just like the grossness of the war and just all of the just devastation that's going on, but from a financial markets perspective, like where does this kind of shake out now, if this is going to be something prolonged or if it's going to stop? Who has been benefiting and who can benefit from it being longer is where I would go with these shocks now that we know that they're kind of instant and they become kind of run rated items. And I haven't done that work on particularly on the war yet, but something on my
Yeah.
to-do list. Yeah.
Well, there's an endless laundry list of variables we get to play we get to play with in a messed up kind of a way. It's
Yeah.
probably just down the task list. Um, uh, Shaggy, one one thing that's been mentioned, we probably all heard in the news, been talked about, or various people chatting about it in discords or communities, is China, of course, and the possibility of an impending stimulus there, right? So I think there's obviously a little bit of bias that goes back to COVID times when stimmies were big in the U.S., of course, as we know, and maybe elsewhere, and so everyone kind of has that I'm going to say enthusiasm, right, for what that can mean in the markets, right? We've also, of course, seen stimmies with airdrops. Just the word stimmy obviously means a lot of good things to a lot of people. So, is that something you're factoring in, a possible China stimulus? Is that a thing in your opinion? Is it a possible catalyst? What are your thoughts there?
Well, I mean, they've been struggling. There's no question about it. They are definitely looking at a few ways to maybe kind of blunt what's going on there, provide a little bit of stimulus. I don't think at this point a big stimulus that's going to excite the markets is likely in the cards. But yeah, it's something to watch. But again, I don't think anything's imminent there that would excite the markets by any means.
I'll ask a slightly different question to you, Easus and Chris, which is, let's just make the assumption that there is a stimulus impending. Not How do you think about that as it relates to the markets currently, or as it relates to the markets in general? Like, if you knew that there was a stimulus coming of some size, do you think that necessarily, maybe this ties back to your comment earlier, Isis, right, which is the markets running in parallel, right, equity markets and crypto markets, and the fact that there's been a little bit of divorce recently, right? So let's just say you thought there was a stimulus coming of any size. Does that automatically mean crypto markets are going to move at that point because money's flowing in? Do you think it's going to be connected? Do you think it's detached? What would be your way of kind of thinking about that?
I'll
And
jump
that's
in.
for you. Yeah, jump in, please.
Yeah. Yeah, I think we'll see something. I see we'll see something, a little bit like just like with all these things, we'll see some sort of short-term movement, right? In equities, like some sort of short-term reaction in equities and in crypto. Um, Longer term, I think people are still, at least in our side, a little bit still. Some of the initial kind of overlaying fears are still kind of baked in, which is, high interest rates, high inflation, um, the economy kind of slowing down, and that sort of thing. And I think what's a little bit more interesting for me as it pertains to the China situation, well, two things, is they kind of had a different approach to the pandemic than we did, right? Um, and they kind of went the no stimmy route, and we went the, the opposite of that, I guess. Somebody could correct me if I'm wrong there, but and you're kind of seeing what's happening in their economy, and I wonder what a stimmy would do. If it would it just be something that would be a band-aid, or like would it have like what would the mid long-term effects be? But I guess on our side, we see how now the stimmy has kind of detached the ability for our kind of monetary tools to be able to have the desired effect. And maybe they were broken in the past anyway. And so, I'm curious how like these two tales are going to play out in the midterm, and what that's going to mean for global markets, right? Um,
Yeah.
yeah, more so than just the China stimmy in isolation.
Yeah, that makes sense. Chris, one of to me at least, like one of the more impressive things that I've always found about you is you're these two guys also, of course, but you also, you're very, very, very kind of prudent and take like a very, very, in a good way, firm line on things. You're very disciplined, is what I would say, right? So as news starts to crop up about a China stimmy or something else that could be a catalyst, be it that you think, if you think like Easus, it's a temporary thing that's a short blip and then it regresses or whatever. Any just quick reactions in terms of how you don't get caught into that or trapped into that? Is that because you also trade and think about things on a short term basis anyway, and your mentality is just in and out, and you're not so into holding things in general? Like any light you could shed on that?
Yeah, I think so. I think my trading background, just the short-term trading, you have to have that discipline. You have to have that emotional detachment. And I'm not a robot. I still feel all those things, and have had to, take extra measures and continuously to make sure my mental is clear. So yeah, I like I do think um, it would cause some sort of volatility, probably a positive catalyst. I don't know how much or how long, um, but you always have to be prepared. If the market is going up, smart people, people with $1 billion, they need the market to go up to get rid of their assets. They need it to go up. So they're not buying. They already did the buying. They provided the wave that is making the market go up and up and up and up. So smart money, you've heard these terms: smart money, big money, whatever. There, it's always going to look the most bullish before it becomes uber bearish, and it's the opposite. It's always going to look super bearish before the bullishness smacks you in the face. And so you kind of always have to be on your toes and try to be balanced and try to think, what's coming next, what is really happening right now. I think Yeezus made a great point about how, yeah, the stimulus would probably counteract what we're trying to do here, with our levers and whatnot. So I could see that actually being a negative, possibly. You can imagine Fed Chair Powell getting on and having to be more hawkish and maybe raise rates even more, this and that. So yeah, there's a lot of things that you have to take into account. It's just, yeah, I'll leave it at that for now.
Yeah, so I mean, what's kind of the parallel comment to talk about that as well in the scheme of having the Fed or whomever having to react, right? And this is totally agnostic of where we're at right now, specifically. The other like pending possible catalyst that's very, very similar is, we have these impending U.S. elections that are happening, right? And Shaggy, I don't remember the stat you put in the other day. I think I've seen it. I think I've seen it somewhere else as well. And I think the stat is as simple as, right, like 0% of presidents in their second going into a second potential term, incumbents have ever gotten reelected when there's a recession or something to that effect, right? Shaggy, is that the kind of right?
Yeah, there's been a recession in the 2 years before an election. No president has ever been reelected. In fact, no president has ever lost reelection when there was not a recession in the 2 years prior. So it's a significant data point in terms of who's likely to win.
So, I mean, you can take that alpha for we're always finding pockets of alpha on here that are unexpected and otherwise. If your decision is to leave here and not invest in NFTs and crypto, but instead go over to some kind of sports book and bet on the presidency, maybe that's the alpha that exists. Maybe
Well, I
there's
mean, if you
other
can, if
things.
you, the challenge is there going to be a recession in the next
Yeah.
year or so, right? I mean, that to me is a massive unknown. So, yeah. But if you can pick that right, then you can probably pick the presidential election right.
So that's actually where I was going a little bit. In the scheme of China, we're talking about stimulus could be negative, right? It could dial up the hawkishness, like we said, and there's also the possibility that something could be influenced within the U.S. as well. And with the impending U.S. elections, how could maybe like a stimmy or something possibly factor in for exactly what you're talking about right now, Shaggy, of preempting entering a recession? Like, how do you think intervention might or could or will play in? What is your take on that?
Well,
With the
first
election?
it's going to be difficult because the Republicans aren't going to go along with anything. So it's going to have to be something that the administration can do without congressional approval. So that limits your options pretty significantly. I do think that we're headed towards a government shutdown. We'll have a nice little fight over it when they do eventually decide to open things up again and perhaps pass some spending bills. I'm sure the Biden administration will try to front load as much of that spending as they can, even if they are not allowed to spend as much as they would like. So they'll look to front load. They're already looking to, find ways to help people delay, having to start those student loan payments again, things like that. They'll do what they can. The question is it enough? And I don't know.
Yeah, I mean, there's other components of that too, as well, Easus, which is, I'm sure you've seen the headlines. I know you're extremely well read and you're always on top of this stuff. And you know, there's a lot of talk about consumer debt as well being extremely high, not just student loans necessarily, but credit cards, right, being extremely high, bills being extremely high. And I'd be not doing my job and my norm as it relates to you guys if I didn't speak about the prospect of automation and the workforce and more capacity for people and how that factors in as well to jobs and opportunity, right? So with consumer debt, with automation, right, as it relates to jobs, do you have a take on that also? Is that concerning to you as it relates to potential liquidity in the market? Like, what's your reaction there?
Yeah, I think yeah, I think a couple of things. The debt thing is definitely concerning. On a lot of levels. I think the first level for what I'm seeing in terms of consumer debt, and I mean people have stopped talking about even the government debt, but specifically on consumer debt is none of this factors in what Shaggy said about the student loan payments coming back, and that's been on pause for so long. So that's just been something that's been outside of people's run rate, right? And I know people have done some stuff where they've normalized inflation for spending and household income. I saw a headline the other day on like Unusual Whales, which seems to be tweeting out a lot more than usual, where they said um money in U.S. bank accounts are higher than 2019, and it was like when you looked at the chart, it was still like way down from the peaks that this kind of environment that we've been in, has it was. And so if we're regressing back to like pre-pandemic stimmy, kind of money flowing levels, people's credit cards are spent all the way up, which they had paid down during the pandemic, and everything is more expensive. And then now if you throw in a right hook of things like that and any kind of slowdown, you're setting up something really interesting, I think, going into the election. Um, I do think that I've seen um, one of the things that I was looking at in terms of automation, and then I'll give it to, it was a loaded question, so I apologize for taking some extra time, but the automation thing is interesting. Like at first, I thought some of the big boys were in trouble. Some of the big guys were in trouble with when things like OpenAI came out. But then naturally, of course, they have the capital to be able to really take advantage of what's going on in terms of automation. And so I think like these again, these mid tier, these B companies, these next tier companies, um, are going to have to figure out ways to get more productive. We're going to figure out. I already start hearing rumblings of packages for the elderly, like for older workers going out, which always for me see, starts the trend of okay, we may start to do some riffs, right? And so I think like when you start to factor all of that stuff in, it makes a very interesting lineup for 2020, end of 2023, 2024.
Yeah, yeah. Chris, do you have opinions on this? Like, I know you and I don't know if you remember, but you and I talked a while back about consumer debt, and this is before we could even get good data originally, right? And figuring out like what does that actually look like? What were the numbers? It was just kind of a partial hypothesis, right? But now that we see more of that, right? We know it's a thing, the student loan thing, this new kind of element that's kind of factoring in as it relates to jobs. Oh yeah, by the way, it's not just in the U.S. It's in Europe as well to some extent, right? It's similar issues there to some extent. What's your latest take on this?
Yeah, I mean, I still feel how I've felt about it for a while. Similar to Easus, is that it is troubling. You know, you have to look at it. So people have all kinds of debt, right? And we encourage that now. You can buy your iPhone and you can finance it. You could, like everything that you buy now, you don't have to pay up front. So we've kind of done it to ourselves, but that's another issue. But I mean, if there is, we do hit an economic downturn, people start losing jobs. Not only do they have all this debt, but they have to, either add to it, or and they can't pay it off either. And then, of course, yes, there's the student loan forgiveness stuff that's supposed to start back up, which will just add more debt to the Americans' plates and other countries as well. So I do think it's concerning, and that's it's hard for me it is not good for the people that live here, their welfare. But that's financially what I have been waiting for, and what I will continue to wait for is some sort of unwind where the job losses occur, people can't pay for things, people have to start liquidating things, real estate, this and that. That's what I'm really looking for as the title of this is that's what I'm trying to load my bags.
It's
All
not
kinds
pack
of
your
bags.
bags. It's load your bags, Chris. Load the bags, not
Load
pack your
them.
bags and
I
leave.
know. That's what I'm trying to load them. My bags are packed now. They've been packed for a while. I'm on vacation. But that's what I'm looking for to load them.
Yeah. So someday, somehow, we will get a positive version of this roundtable where everyone's going to be never overly flighty and lofty, but they're going to be humbly in the middle, and that's how you know we're heading in a good direction at that point, because it's a very balanced crew that we have here. But let me afford maybe one possible ray of thought or direction that could exist here. So you have all these factors that exist, right? And you have all these catalysts that we just kind of talked about in context on interest rates and and the Fed and consumer debt and the international and all that stuff. Lots of different problems that everyone's aware of, right? There's no surprises that exist there. But there is this trend that exists around us with with automation and how that's kind of progressing, right? On the digital side of things, possibly in the physical side of things as well, but certainly on the digital side of things, right? And we have our resident fine folks at MVHQ who are certainly pretty front and center with that. And the connection that I want to just draw between these things is right now we have a world in which we're kind of using these different outward-facing terms, right? We're saying AI is a thing, and that's a hot trend recently. Before that, as we know, it was Web3. It was at the end of the day, this is tech, and it's not only just tech, it's automation tech, right? Smart contracts were designed to be able to enable automation. That's literally the purpose of them, right? It's literally the design behind them. And therefore, as time goes on, AI is not going to be a term that's mentioned anymore. All the weird Web3 terms that we're used to are not going to be a thing anymore. It's just going to be the way, right? It's just going to be normal. So I also kind of wonder if, even though in aggregate, there's going to be a lot of people who have problems that exist, if there is going to be that disproportionate transfer of wealth that exists for people who are within this automation space, which in aggregate is creating more productivity, is producing more product because of what it does. Is that reasonable? Do we buy that even if the overall economy is having problems? Shaggy, did you follow that whole thing, and do you agree with this? Do you think it's a fair way to think about it? The pie is expanding, and those who are kind of in the AI automation Web3 space are poised to gain from it by providing tools, by being attached to it? Do you think that's fair? Do you think it's just too shrinking of a pie right now? Like, how do you think about that?
I don't know. I don't necessarily think about it like that. I mean, the AI, very exciting. Lots of applications. Probably going to be a big part of our lives as time goes on. But it's not the first technical innovation. I mean, back in the '80s, you had the computer boom. Then in the '90s, you had the internet boom. Right. This isn't the first rodeo with a new technology that really transforms things. Now, obviously, there's going to be huge winners that come out of that, but it doesn't. Just because you're early doesn't necessarily mean you're going to be one of those winners. You could be, but I don't think it's a certainty. I think when you're in these fairly new technology shifts, it pays to spread your bets around, right? So diversify and see if you can't get in the Amazon or the Google or the Apple type of company. You're probably gonna have some bets in a Netscape or some other technologies that you had huge even adoption that or companies that had huge adoption that just didn't make the right plays and turned to zero. So I think it's important to have an outside bet in the space overall, but again, diversification I think is key.
Easus, with how I framed it, do you think it's, I mean, you're a very big tech guy. You came from the kind of, let's call it automation world before for the sake of this show. Um, Merging AI and Web3 and smart contracts into just general automation tech, do you agree with that frame? Is it just really an extension of what's always existed with technology, where we're just trying to automate things better, and it shouldn't be called this like discrete period? It's just a continuation of the past. Like, how special do you think the time is right now that we're in? Let's ask that question.
I think it's extremely special. I think we're in a very special time now. To be honest with you, I'm actually as right before I go, I'm rebranding myself for like the second time this year in the last couple of months. And I'm actually taking, I was writing a lot about AI before, and I realized that nobody really cares about like AI per se, right? Like people care about what it's going to do for them, and I don't think people have really started to. I think they've been listening to like doing a lot of listening to the news about what it's going to do, and I think we've gone to this kind of we got in a space where we just kind of listen versus kind of just touch and try and feel. Not the people here,
Yeah.
because a lot of people here were early, but I think if you start touching and feeling it, you start to see where it's going to change things. And so I think, to answer your question, I think two parts. I think the pie grows. One of the lines I'm working on was something like tractors, when people thought tractors was going to displace farming, and then look what happened there, right? And like, or like disrupt everything because everybody was farmers, and then tractors, and then we got other things, and innovate, and the industrial age happened, and here we are, right? I think that all of these technologies generally become expansive for the same reason that I think it was Krista said billionaires don't make money when things are going down, they make money when things are going up, so they're going to find ways to grow the pie. But I do think that there's going to be displacement, and I think that there could be one of those shocks that could happen in the short term to give Chris a chance to load up his bags again and ride this wave. But I think that people need to start adjusting for what, like, I think this new reality is going to be. And I haven't seen that shift yet, right? In like the conversations I've been having.
Chris, our local uh, heavy cynic over there, who may or may not be a robot, not confirmed either way at this point, just to be crystal clear. Um, I've met him in person, but I still have not physically checked whether he's a robot or not. Do you buy into this narrative? Like, do you think that this, again, you can call it whatever you want, AI, you can call it the follow-on of Web3 and smart contracts, you can call it general automation. Is this a big thing right now? Is this nonsense and just kind of like headline hoopla, and it's just BS, and it's not pragmatic enough yet? Do you have you what's your pulse on that? What is your take?
No, I mean, throughout history, there's always the thing, kind of echoing what's already been said. There was the agricultural revolution, the industrial revolution. These are all, like, we think of technology now as a computer doing things for me. But all technology is an increase in efficiency. So we made plows, so we were able to farm better. We made the assembly line, which enabled us to build stuff more efficiently, yada yada. Very simplified versions, but yeah. So I think now is the age of AI, and so yes, if you are involved in the space, I'm not going to get ahead of myself. If you're involved in artificial intelligence, yes, I think you are making a smart move. Like what's already been said, timing is everything as well. So you could be making a move that you think is good, but the timing of it isn't right. People aren't ready for it yet. And so you fail in your endeavor or whatever you think is going to happen. But then things change, more people grow up with this technology, and they become more comfortable with it. And then so what you tried to do 20 years ago is actually now ready to happen. So I don't think it guarantees you success in any way, as Shaggy said, but it does put you in the right spot. Like when I got into NFTs, I was just like, what am I really doing here? Like you could feel that there was something there, and I put my heart and soul into like just over and over, like researching all this stuff, and okay, there's something here. And then all of a sudden you're a part of this, you got in on the bottom floor of this booming thing. And I think that's always going to be an opportunity. But I don't want to put like AI and crypto / Web3 in the same bucket either, because there is a lot of automation that goes on with crypto and stuff like that, but I am a little bit more pessimistic with the crypto type stuff than I am with actual AI, specifically the decentralization type stuff, and I've spoke on it before. There's just never been, humans were not we were not built to live in a decentralized society. And so I think it would be wise for people that are in this space, artificial intelligence, Web3, yada yada, to understand that it's always going to be run by somebody. And so think about that when you're making your investments and when you're making your decisions for your future.
So we've had these roundtables. For anybody not familiar, I guess even for the people who are familiar, but those who are not familiar, we've had these roundtables a few times already. I think this is the fourth one, I want to say, if I had to guess. And what's interesting is that in the past versions of them, it's been a pretty identically similar narrative, I would say, across the three guys, which in and of itself should say something, right? Because these are a really kind of impressive, awesome crew, as everyone knows. But today, even though it doesn't perfectly sound like that, and like the end result is similar, there's a little bit of deviation that I feel like exists in terms of how to approach this to some extent. What I think is also cool about you guys is, of course, nobody's just one thing, right? However, there's a little bit of course, difference across you three in the sense of like Shaggy, I know always tends to talk more from the investor vantage point. Chris, you're certainly more in the direction of trader and tighter timelines to some extent. And Easus, I know you have some background in trading, but I also know you're a builder as well. So, one of the key questions I'm sure many people are thinking out of this is, okay, fine, let's just say I buy into the fact that there's going to be disproportionate wealth that exists here, and I buy into this thesis. But of course, now the question is going to become, how do I capitalize on that? And I know we've talked about a basket of different investments that could be a thing, and that's one direction. But I'd love to hear your guys' reactions on how you think to capitalize on this, for a crowd, knowing that we've got a variety of different people in there, and knowing that you guys come from different vantage points too. So I'll start with you, Chris, and we'll go in the other direction, which is, let's just say you buy into the premise that AI is a thing and it's going to have disproportionate wealth, and maybe the Web3 stuff, which you're, like you said, you're slightly more bullish on or more bearish on, but maybe you think that's a thing. And also touching on like the diversification side of things, like how are you capitalizing on this if you wanted to capitalize on it, and knowing how you approach things?
Yeah, I guess honestly, just from, specifically, I guess really from all aspects. Like if I were looking to build something, start a business, or invest in people that are doing the same, it's to take a step back, think about, what we desire today, what we do in society today, and how can that be made better by AI, and really, honestly, like sit back and journal about it, brainstorm about it. Um, Something that I've been thinking about recently is, like if, for example, let's say I think we're far away. I know you really think you really love this stuff, Aslo. I think we're far away from this stuff, but say restaurants or fast food chains are all run by robots. Maybe there's a person there managing the robots, but it's we got rid of. They're able to cut costs by reducing the human work rate by 90% or whatever. How can you capitalize on that? Well, maybe you start buying up the commercial real estate that's no longer being used for offices, stuff like that. Maybe you build these like cookie cutter, or yeah, you build these like little cookie cutter, I guess, restaurants or just boxes where people can insert their fast food chain. McDonald's can come in and just, the machines are already all there, yada yada. They just put their name on the thing. They're able to code in the machines of what their formulas for their food is, something like that. And so it's just like, and that's just like a little like brainstorming activity that I like to do, of just what do we do now, what do we desire as humans, and how can AI make that better?
I think you said something before, Chris, also that I mean, you kind of said it very nonchalantly, but I happen to think it's really, really important and insightful, which is like all of this technology at the end of the day that we're talking about, right? For the most part, I don't want to overgeneralize here, but for the most part, all just built since the dawn of time, all just builds on top of what's already existed and just does it better and more efficiently, right? So, like said differently, like people's needs, like Maslow's hierarchy still exists, like even in 23, right? So like people's needs and hopes and wants and desires and whatever, like have not changed since the dawn of time. Now, what they look like maybe have changed, it has changed a little bit, right? But they have not changed since the dawn of time. So the question is like knowing that that's the foundation and people still want the same stuff and desire the same stuff is what's going to get them there, right? And how can you capitalize on that? And it's kind of what you said, and I'm just expanding upon it to be honest with you. But I think that's a really interesting kind of insight for people that you gave of kind of people's personalities and interests being the same. Easus, you're you come from the trading side of things, right? But you also are a builder too, right? You've been a really good, savvy, kind of nimble builder and thinker and hacker and all those kinds of things in the past. What about you? Where does your brain go immediately if you're saying, I think there's something here. I think people will continue to want things streamlined, and it's maybe an accelerated point, like you said right now. Where does your head go in terms of opportunity currently?
Yeah, I'm building in this area right now, and so I'm not a coder. I'm like a tinkerer, and I going back a couple of questions before you were talking about Web3 and AI, and I had an article kind of typed up and decided not to go with it. I think that these technologies kind of represent are representative of where we are mentally, kind of societally, if that's a word. You look at Web3, just like even though we won't have decentralization, and I agree with Chris there. I think that just like the need for like just the need for transparency, the need for operation, the need for like kind of like autonomy, and the need for just like access to data and information and capital and removing gatekeeping is I think that's a theme that if you're like a new company coming up, even if you look at what Facebook is doing now and Google, they're publishing their work. MIT just open source their computer science classes. Like they may not be trading crypto, but the things that we bought into for Web3 are happening off chain in a lot of ways in terms of people's mentality. And I look at AI is going to be adopted a lot easier because we've already adopted it. We already had a Alexa in our homes. We already had iPhones in our hands. And so what I think what's going to happen and what I'm looking forward to and building towards is I think that, and I'm a little bit older than most people here, in Web3, but I think that we're getting out of this like kind of industrialized age where we were like cookie cutter roles and cookie cutter professions, and that's going to cause a displacement I talked about. But we saw through social media and we saw through just even some things in Web3 how creativity and they call it like creative economy is coming up. I think that people should really be looking at AI and looking at ways for them to personalize what they do and what they can offer and looking for ways to monetize that with all of the automation, innovation, and tools that they have available to them. And I think that if you're not playing around with generative AI, something in this area, and I think you're missing out an opportunity for you to be early on what I think is going to be transformational in terms of how people work in the future. Might not be next year, might be 5, 10 years from now, but the earlier you get on and get your mindset kind of shifted, I think the better, especially for younger people, looking to plan out for the next 10, 15, 20 years.
Well, what's interesting about that too, right, is that like with what you're saying is even if you learn that skills, like it's a flexible skill set, right? It's still going to merge into the things that we talk about and like in here in terms of like, having kind of, uh, you know, PFPs that people like and projects and membership benefits and things like that. All the things that in communities, all the things that everyone gravitates towards within web. Like these are going to be valuable tools for there too. They've been already, right? Like generative art was a thing already. It didn't, that existed before AI became a huge buzzword, to be really honest. So totally agree with you there. Shaggy, you're more of an, on the investor side of things. Um, given the fact that there is this kind of like foundation of core businesses that people interact with on a more normal basis, right? Web3 is not there yet, right? It's still on the risky side of the curve, so people are interacting with day-to-day things. Do you think that shifts people's, for the time being at least, shifts people's investments more towards equity markets because that's an easier way to invest in and capitalize on this kind of stuff, on automation and this automation industrial revolution for right now? Do you think that's what happens?
Well, I mean, that's what we saw happen this year. I mean, there was just a massive amount of capital flow into uh, anything associated with AI in the equity markets. You did not see that capital flow into crypto, and you definitely didn't see that capital flow in to NFTs. So, yeah, I mean, the opportunity. Um, for most big investors remains the equity market. There's just not liquidity especially in NFTs. There's not the consumer protections. There's not the securities regulations. Everything that protects big investment in some of these other places. You are seeing an uptick in Bitcoin and ETH, though, adoption, I think, from more mainstream investors, and I think that will continue. But I do think it's a bit of a stretch for those types of investors to start to shuttle down or start to move down the risk spectrum, at least as it stands today. It just doesn't look good if you're an institution or you're a big investor and you make a huge investment in an altcoin or an NFT project, etc., and then have a exploit that drains liquidity. You have some type of rug from the NFT project, etc. It's just way too much of what I'll call scammy type of activity in this space to generate real substantial big dollar investment. So yes, for the time being, it will gravitate to the equity markets, and that's exactly what we've seen this summer.
I just want to put maybe one final cap on this before we kind of wrap up, which is in line with this kind of thinking of, historically, equity markets and crypto markets and then NFT markets were running in line. I, I just wonder whether, building on this last part of our conversation, whether they're running in line more just because of the overall state of the economy, not because they're necessarily perfectly correlated assets or even similar assets at all. If you really like dissect what NFTs are and NFT projects are, right? If you simply just remove the technology from art, and I know Shaggy, you like art a lot, you always talk about that, right? For a variety of reasons, and you just simply like pulled off the technology from it, would you call art the same asset as an equity? Like, no world you'd ever consider it the same thing, right? So now all you're doing is strapping technology on top of it to make it a little bit more liquid or automated or improved or whatever else, but it's still the same product. It's still art. Maybe you can use it online also and showcase it. Go ahead, Aces.
No, I was going to say, I mean, absolutely. I mean, I think this is, for me, what's lacking in the NFT space, while the smart contracts, everything, they're innovative, et cetera. Like, show me something new and useful that they're good for that I don't already have.
Right. Right.
And I don't know that that application is there. Do I think that application will come one day? I do, but I don't think it's there. It's definitely not a PFP project. Art, that is an asset class in the traditional world of very illiquid, esoteric asset class. At least I understand the utility there. I like that NFTs make it more liquid and easier to trade. But in general, I've yet to see an application of NFT, that that does something that the traditional world doesn't already offer me in Web 2. I mean, I do think using NFTs for authentication is interesting. I'm not quite sure how in our current structure you make a lot of money from it, but I do like the idea of if I buy a luxury good and an NFT comes with it, then I have kind of provenance and I know that it's legit. I like the digitization of real assets. So I think there's a lot of potential. I don't think it's here yet, and nothing that I've seen, gets me overly excited yet about some new use case that's going to transform, the lives of everyday people. Something that we don't have yet.
Yeah, and I go over to another category, which is a little bit of a strange category, but that I happen to know very, very well, which is the membership side of things, right? And outside of art projects, for instance, right, and even including sometimes, most NFT projects are memberships. They're membership programs at the end of the day, right? That come with a bunch of benefits attached to it. I'm going to remove and divorce the PFP side of things because that to me historically was like a little bit more foreign. But at least the membership side of things, what we have here is like a bunch of assets that are they're valuable. Like there's no doubt that memberships in certain cases can be really valuable. You've seen it with country clubs, you've seen it, with Soho House, you've seen it with other cases, right? And there's benefits that come with it, and social benefits and otherwise access. They're valuable things that exist here. There's no doubt about it. But what also dawns on me that I think a lot of people know is that PFPs, part of the problem with PFPs is that they're zero sum, right? Like most people, unless there's a way to showcase it a little bit better, a la a gallery, in which case it becomes art, you can only really put one PFP up at a time, right? So there's some kind of capacity that exists there, at least in the current form, right? And also to some extent, even with memberships, right, where you only have so much time you can allocate there towards something, right? You can't have, 50 country club memberships if you're a golfer or something like that. You don't have time to go to all those places. It's literally useless for you at least, right? Unless you're going to resell it. So, I think there's, in conclusion, I mean, I think there's like a lot of value in these things. And I think it's still looking really bright overall in terms of like what it does and the evolution of technology. But I think at the end of the day, this is automation technology. It still needs more users in it. So supply and demand is a little bit better. And, it seems like all that, it seems like all that's lining up really great right now. And, overall, I mean, I think for my own purposes, I'll say I really enjoy these conversations where we have these round tables. And so I really appreciate the three of you coming on, like always, being able to pull up every so often and give everyone the latest lay of the land. So appreciate you three coming on and kind of dissecting this together. Live crowd, appreciate you like always for your thoughts and some commentary in the background as well. Much, much appreciated. In however many episodes from now we do another version of these, I don't know, maybe we'll be speaking a different language. And I know good times are ahead. I know the foundation's still solid, still definitely looking for some more innovation, but very much looking forward to kind of carrying forward with everybody. So thank you so much to you three again, and we'll see everybody similar time next week all. Thanks so much.
Thanks, Aslo.
Thank you.
Thanks, guys.